So the trade war is escalating. The trade war is escalating for a very simple reason. It's because at the end of the day, we're having a problem with the Supreme Court that is questioning those emergency tariffs. So I'm going to make a point. The point I'm going to make to you is that, in effect, the administration knows already that they're not going to get the emergency tariffs through the Supreme Court. That's not going to happen. And the reason why it is not going to happen is because, first of all, it just went through the appeal court, and the appeals court did not like it at all. So those emergency tariffs are not going to work, right? They had a 7-4 decision on August 29th, basically saying that no, you can't do these things. Okay, you cannot do these things, and the reason you cannot impose tariffs across the board, these emergency tariffs, is because the decision is grounded in the major questions doctrine. Meaning, if a president takes sweeping economic actions, Congress must have clearly delegated the power. And the appeals court said no. The Supreme Court more than likely is also going to say no, right? Because the reason they're saying that is because the issue with it is that it's going to they're not going to do it. The likelihood is the same for the same reason, right? Keep in mind that the Supreme Court conservative legal trend in the court, they had a 6-3 conservative majority. That means that doesn't mean necessarily they're going to side with the president. It means that they have consistently limited the broad executive or agency action without explicit congressional. So again, this idea, and I want you to understand that, and don't forget to join the channel, is I want you to understand that what they're basically saying is we cannot have broad executive action in the fashion that it is being done. That is too much, and without Congress you can't do it. So they're going to say no. And the reason they said no is because they said no last year to the student loan forgiveness. Remember in 2023 they said no to Biden, right? When he wanted to have a sweeping congressional removing of all the loans of forgiveness. That is not going to happen, and it's probably going to happen this time around. So what does that mean? Well, the administration knows that already. They already know that, and that's why they're shifting gears already. Okay, so the administration already knows that they're not going to win that court case, and that court case, frankly, they have until August 15, the October 15. This stays on for them to submit a rebuttal for the administration. But hey, hold on. Even if they send the documents, the Supreme Court is not going to review this, next week. This could last up to mid-time next year, in June of 2026. That's a long time for them to wait. So in the meantime, they're already complaining that, listen, I'm not able to get the things done that I want to get done. So I need to be able to do these things. I want to be able to go to court. I want to be able to explain myself. And they say, well, this is not going to happen right away. This is going to take some time. So the administration is a bit in a pickle right now, the U.S. administration. They're in an administration because their concern is that they're not going to be able to do it. They're not going to be able to get this thing done. And so what do? You're negotiating with a bunch of people, right? You're negotiating, but they're going to tell, well, hold on, what am I talking to you for? I should be talking to the court, and you don't have that. You don't have Congress with you. The U.S. administration does not have Congress approval for those tariffs. Therefore, they are being threatened, and this is important because is between October, November, or June of next year for the Supreme Court to actually say anything. If that does not work, right, we are going to have a problem, and the problem we're going to have is that they won't be able to do it, and that's going to be a lot of damage. That's going to be a lot of damage because they are not going to want to do it. So then what do? How do you negotiate in something like that? Who do you negotiate with? There's no one to negotiate with because at the end of the day, the administration is not going to be able to get it done. So what is the administration doing? Well, so they are pivoting to other tariffs. And they're going over the USMCA as well, which is due in July 2026. Now, even if they're successful, imagine, right? So you're as you could see, there's a bunch of tariffs happening as we speak, right? They're gonna need to negotiate this thing, and if they can't do it, then the administration is going to need to, and that's what they're doing right now. They're shifting to other tariffs. They're shifting to what we call the security tariffs, and they're going to be reviewing the USMCA as well with Mexico and Canada. And that, my friend, is a problem because in the meantime, what do you do? And then the bigger problem is this: is that if you are not able to get this done properly, right, you're gonna have to give the money back. You're gonna have to give 200, 300 billion, and then by the end of the year, the U.S. will have collected 300 billion. So what do you do in the meantime? You keep collecting the money until you know for a fact that you're not gonna be able to complete the deals. The money is coming in already. It's going straight to the Supreme Court. I mean, to the Treasury. It's going to the Treasury. And if this tariff thing works out, we're talking $3-4 trillion over time. So that's very good. Okay, and the issue is going to be, how do you want to do it? How do you want to do it? So what they're going to do, they are going to basically shift to different type of tariffs. They are going to go after the security tariffs, right? And that in itself is a challenge, but they have no choice. So imagine, right? You're doing two things. You're gonna basically keep the current money coming in because you can't give it back until you know for a fact that the Supreme Court says no, you're out. Okay. Two, what you're going to do is you're going to keep collecting the money, right? But you need to be aware that you may have to give it back. And this is a big problem. This is a big problem for the bond market because they actually they need that money because the U.S. owes $37 trillion. Right? That's $37 trillion. You need that type of money to pay for the treasuries, the $37 trillion. So they're assuming that money is going to come in. If the money is being pulled back, that's going to have impact on the bond market, which probably is going to be a problem with the rating. And this is not something that the U.S. administration need right now. But what can they do? Right? What can they do? Can they take it back? Can they give it back? No, they can't do that. Right? And we won't know until maybe up to June of next year. So in the meantime, what they're doing, shifting gear. Right? And by shifting gear, what they're doing really is they're going after the security tariffs. And that's a problem, right? It is a very difficult thing. The effective tariffs we're talking about and it's good because these tariffs, they could not be impacted. We're talking about tariffs remain lawful because they are based on separate, explicit statutory authority, which means not emergency powers. That's gone. That you can't do. But then, and they're not targeted by the court ruling. So we're talking about Section 232 and Section 301. So Section 232, basically, we're talking steel and aluminum tariffs. This country needs the aluminum and they need the steel tariffs in order to keep going, because obviously you need steel to build weapons and armory and things like that, right? So up to 50% on steel and aluminum expanded in June 2025. Automobile, 25% duties imposed on vehicle and parts effective early 2025. So these are the security that the Supreme Court can't do anything about. And then of course there's Section 301, which are targeted tariffs, which remain intact due to their statutory basis, like against China for intellectual property violations, for example. So they tend to be very targeted, very well done, and those the Supreme Court really is not going to rule on that. Now, if Trump retaliates with tariff and export restriction over digital taxes, because that's the other thing that's happening, is some countries want to actually tax the U.S. The digital tax and regulation, and it would eventually spill into the U.S. service sector. That's a danger. So remember, at this point, all we're talking about really is we're mostly talking about industrials, steel, right? Stuff that you make. But now there's a possibility that these as a country can actually tax what we call the digital tax and regulations. Now, if they go after that, now industrial is 20% of the GDP in the US. Now service is 80%. Now if you're going after the service, then that's a double whammy. And it would eventually spill into the US service sector in several ways. The impact will be both direct and indirect. So that's the reason why the administration is being very, very clear. Do not tax what we have with our service, where we're talking about Google and Apple and Amazon. Do not even think of going, because if you the direct impact on U.S. digital services, for example, let's hope that they uphold the tariffs, but they probably won't do it. They probably won't do it, and this is going to be a catastrophe. I'm telling you right now. Watch out. Watch for your job. Watch for the stock market. The stock market is not going to like it because it's going to be surprised, but it's going to like it because it's going to reduce the so-called inflation. But it's not going to be good for the bond market, because the bond market is looking for that money from the tariffs to pay for the bills, and they're not going to get that. Okay. So if they decide to tax the tariffs and the export restriction, we're talking about direct impact on U.S. digital services, like higher cost abroad. If Europe, India, and other keep their digital taxes, U.S. firms such as Google, Meta, Apple, right, all the service would pay billions more in foreign taxes, and they might pass these costs back to consumer. That's the ultimate weapon. And that would create World War III with the U.S. administration, because if you go after those and you go after the services, then you have a real war going on, right? So countries hit with U.S. tariffs could counter-retaliate by restricting U.S. digital firms' market access. Europe could say, this is, well, they're not going to say it because 50% is not a lot, but India could do it, and they could target, right, the U.S. digital firm market access. If that happened, then the market is going to take a dive. And then, of course, there's going to be knock-on effects across U.S. service industries, cloud and IT services, financial and consulting services, logistic and professional services. It's going to have an impact on the U.S. employment. The U.S. service sector accounts for about 70 to 75%. I always said that, of the U.S. GDP and stocks and jobs. If foreign government escalate by restricting U.S. services, job growth and tech finance are going to impact. Of course, they know that as well. The U.S. The foreign companies, right? The foreign countries, before they do that, they're gonna have to think 2, 3, 4, 5 times. Right? Tariffs usually focus on goods, but in this scenario, the red target is the services. No one has targeted the U.S. services. The moment they do that, that's gonna be a lot of damage, because they're not gonna like this at all. Okay. And right now, the U.S. is basically saying, President Trump very, very recently posted on his Truth Socials that he would retaliate via hefty tariffs and export restriction. What does that mean? It means do not touch the services, right? Against country imposing, it's called a digital tax or regulation that he deems discriminatory towards American tech giants like Google. It's not so much that he wants to protect Google and these guys, it's just that now you're going after the service sector of the U.S. and where 70% of the money comes from. He framed these measures such as the UK Digital Tax and the EU Digital Services Act and the Digital Market Act. They've got a bunch of acts as unfair advantage for Chinese tech firms while penalizing U.S. companies. That he has a right to do. That has nothing to do with Supreme Court, and that could be very painful. The countries that are targeted right now for this thing, we're talking, then specific countries, but we're talking basically European countries like France, Italy, Spain, and the UK, South Korea. As you've seen yesterday, he met with the tech leaders. These threats followed a meeting between Trump and the tech executive yesterday who voiced strong opposition in digital regulation. Where do you think all these people were in Washington yesterday? Right? They said, you better do something. You better do something if they go after the services. We do not want to be taxed at all. Right? We'll invest $600 billion in the U.S., but your job is to go over there. And that's what he said. If any countries impose tariffs on the digital, that's basically the service, I will hit you and I will hit you back really hard. Okay. EU pushback for France and Germany rejected Trump's threats outright, emphasizing regulation is their sovereign right and evoking tools like the EU anti-coercion instrument to fight back. The U.S. tech companies, especially those dependent on global markets, have raised alarms over potential disruption, with chip maker like NVIDIA, AMD particularly at risk. So now we're talking a different type of situation where we're basically going after those companies which provide services. And that is not good. And the reason, again, you have the direct impact on the U.S. digital services, a knock-on effect across U.S. service industry, impact on U.S. employment, macroeconomic ripple, and possible silver lining. So what are we saying is, well, essentially there's a lot of wind happening on this U.S. administration and the U.S. that could impact you and will impact the stock market and the bond market. September is going to be a very delicate period for to what's going on right now. And September is always a very delicate period because it was always been a very delicate period, right? It's been a delicate period because stocks have never done well in September, right? So you got three things going on. You got to wait for the Supreme Court, what they're going to say, but then you can't wait. You're going to have to wait until probably, first quarter of 2026, unless they stop everything and do it. Although they're being pressured right now. Peter Navarro came out. It's going to be the end of the world if the Supreme Court doesn't do anything. Two, there's rumors that they want to start taxing the service industry for the U.S. Okay. 3, Trump is reacting. He's saying if you do it, that's not going to happen. 4, going after a different type of tariffs. See, U.S. trade blocking U.S. and of the United States. That is not good. And frankly, you have to be very careful about that. Right? Then, of course, what's going to happen is they are going to want to negotiate again the USMCA for July of next year, because that needs to be reviewed. Because frankly, even though they've been talking tough back and forth with Canada, Canada right now is protected under the USMCA. Canada everything that you hear, I mean, 70 or 80% of the goods are protected, right? So tariff right now is not impacting Canada that bad. But the administration is saying, listen, I'm going to lose this case with the Supreme Court. So I got to renegotiate this. I got to negotiate. I'm going to go after the security tariffs. And security tariffs, we're talking about steel. So we're talking about India again, 50%. We're talking about a bunch of countries and China. And of course, we have to talk about the semiconductors. Right? We need to make sure that we control that production. So that's also going to be targeting, meaning if you haven't been very specific. So the administration is shifting over, and they're shifting over because they have no choice. Now, of course, this is very difficult, right? Very difficult because there's negotiation going on with these other countries, and if they think that the Supreme Court is going to say no to a bunch of those things, then they're going to be much more difficult to negotiate with, right? And that is the problem. How are you going to negotiate somewhere knowing that you don't have the power to negotiate? And that's what's happening right now, my friends. And the concern is going to be, well, what if the Supreme Court says give the money back? Give the money back for the tariffs. What do? Collecting $300 billion by the end of the year. By next year, it could be another $400-500 billion, $500 billion. You give the money back, and then what? So if you're China, Mexico, and India, don't forget, the India, Mexico, and China do not pay the tariffs, to be clear, but the companies themselves. So if you're Ford and you've been paying tariffs, and then the money comes back, it's going to be great for Ford. But then they could say, "Well, hold on, you've been holding my money for like a year. I would like to have interest, and in fact, because of what you did, it impacted my stocks, and I'm going to sue you now." This could be, and this is why Peter Navarro says this is the end of the United States, because you're cutting, and of course, if the Supreme Court says, okay, fine, it is legal, then we're going to say, but hold on a second here. Hold on, how could that be legal, right? Because the Federal Circuit Court on August 29th, 7-4, they said those emergency tariffs are not legal, and they exceed presidential authority. I mean, they're pretty clear what the authority of the president is, right? And that decision is really grounded on something very simple, which I want you to understand. It's called the Major Questions Doctrine, meaning if a president takes sweeping economic actions, Congress must have clearly delegated the power. I mean, he could do all these things that he needs Congress to opine. And of course, without bringing Epstein again, since the situation, it would appear to be a crack in the GOP bastion of togetherness. Let's put it this way, meaning that one of the Republican congressmen is asking and going directly against Trump by requesting that all of the document for Epstein be released. And this is a guy that's been a pain in Donald Trump's thorn on his side, and he wants him out. And the guy says, "No, I want," and he's probably going to be able to get away with it. And if he gets away with it, if he gets Congress to turn around and vote for a motion to release all of the Epstein file, he needs 6 Republicans to do it, and a bunch of Democrats, which they're all going to do. It will be the first time that someone has gone against Trump and won, because a lot of Republicans tried to go against Trump and they got swept aside. They got pushed away. Liz Cheney, remember her? She's gone, and a bunch of others. Now this guy is also saying, "I don't agree." Even though it is not a hoax, right? The Epstein file is not a hoax, so do not push it aside. Do not let it happen. We need to talk about it. The point being is that the Republicans are starting to shake a little bit. The base is starting to shake, and there is a Massey, a Republican congressman, is putting up a fight. Is he going to win? All of them have lost so far. because Trump basically doesn't want. He says, we're already releasing everything else. What else do you want to release? You're sucking the air out of the room. Now, of course, people are saying, aha, you're doing it because you're guilty. No, I think he's doing it because he says, I got enough issue to deal with. I got to deal with all these people I'm negotiating with. I got to deal with the Supreme Court. Now I got to deal with the Epstein file. It's a total waste of time. Enough. Now, is this guy doing it because he truly cares about the victims, and he wants everything out? I mean, they've been releasing a bunch of stuff on Epstein, but frankly, nothing really earth-shattering right now. So, and this is where it all fits together with the tariffs, because that's a big issue. You may not fully understand what's going on right now, but this is a big issue, this tariffs, because if they're not able to get this thing done, meaning in the Supreme Court, and they probably will say no, because the court is 6-3 conservative majority, has consistently limited broad executive or agency action without explicit congressional approval. When the founders created the United States, they basically say, okay, we'll have the executive power with lots of power, but they cannot be totally unchecked. We want to make sure we have a Congress out there checking you out. Okay, because that's the balance of power, right? You're not a king or an emperor. We have Congress, and Congress is there for that. Okay, and for that same logic, when Biden went there in 2023, it was struck down because Biden wanted to do what's called the student loan forgiveness program in 2023. Then there was the West Virginia versus EPA 2022, right? And it curbed the EPA climate authority under the major questions doctrine. They said, no, you can't do that either. You don't have the right to do that. So by the same logic, it is likely that they will find the IEEPA, which is the Emergency Power Act, does not authorize tariffs on nearly all imports without congressional approval. You're going to have to go to Congress. But going to Congress, the thing with Congress, a lot of them, I'm sure, the reason they didn't go to Congress for the tariff is because a lot of them are saying this is a little too much, right? I mean, why are we tariffing Brazil for 50%? You would literally have to go to Congress and say, I want to tariff Brazil at 50% because they're trying to imprison my friend Bolsonaro and they are being mean to him. And they're going to say, well, yeah, but this would have to do with the emergency. This is a personal thing between you and this guy, right? And that's why you figure, you know what, I don't have time for this. Let me just do it. Okay, do it. But now, this is executive power, right? As an executive, you're supposed to make decision. The thing is, you're making a lot of decision, and now they're coming back to haunt you because the Supreme Court is going to say no. I mean, if they say yes, then it's going to be, whoa, somebody got to them then, because that doesn't make any sense. So there's going to be a lot of back and forth. Don't forget, there's 9 of them. These people, nine of the 70-80% the Supreme Court will strike down those tariffs. These are emergency tariffs. Now keep in mind, we're not talking about all the tariffs here. Well, we're just talking about the emergency tariffs. Now there's 2 other type of tariffs, and I want my subscribers and my members to understand that there are 2 other type of tariffs as well. And these tariffs is basically Section 232, which is security, and Section 301, which is targeted trade remedies, which is basically the thing with China. China is unfair what they're doing. Not emergencies. There's no emergency with China. There's no fentanyl coming from China, right? I guess there's some fentanyl and stuff coming from Canada and Mexico. But so the 301 really targets is a trade remedies. The other one that's more important is the steel and the autos. The rights of trafficking of thing never worked. So there's a likelihood that obviously that's not going to work. Right? And if it doesn't work, then you have to go after these other tariffs. Now, how are you going to make this work? Well, you basically said that we need, and don't forget the U.S., and something that I've been saying for quite some time, the U.S. is losing ground from an industrial perspective. The U.S. used to build its own steel. Remember, there's a company called the Bethlehem Steel, which went out of business. A lot of these industrial factories and very important got pushed away little by little. They got pushed away into other countries, mostly China. China is doing a fantastic job with all of its, everything that it's doing with the pharmaceutical item, the having to do with the rare earth minerals. So it's an attempt to bring this back. Now you have to understand that all of these have been attempted by the previous administration, and whomever would have been next, they would have done the same thing. They would have done the same thing. Maybe not in a such coercive way and caustic way, or in a fast kind of way, but the U.S. has no time. The U.S. has no time. They're losing ground fast. I mean, look what's happening right now with China and India and Russia. They got together. They had a great time. They had a party over in China. And they had now, did you have to, you could have brought these people over and had a meeting and it was done. Did you have to bring the armies and the tanks, and you were doing something? There was a very specific message being sent, and basically the message sent by China has been that I'm the new one, right? I'm staying in the middle. I got China and I got Russia on my right and I got India on my left, and look at me now. I am in charge and you need me. And they're right. The U.S. needs China for 100% of its antibiotics. The U.S. needs China for almost 100% of its rare earth minerals. And there's nothing rare about the rare earth minerals, right? It's not rare. It's just you forgot how to make it. Okay. And of course, in the stock market, you can be doing a lot of damage. You can make a lot of money right now because, frankly, at the end of the day, what you're looking at is anything with rare earth minerals could be very good. I mean, I made some recommendation in my for my members. The stocks are doing pretty well right now. I mean, the stock market overall is doing great, so nothing to sneeze at. But that's something that you want to take a look at. Is it going to be a problem with the stock market going forward? Well, I don't think you're going to have a problem with the stock market now, because the Fed is going to lower rates, right? They're going to lower rates in September, so there's nothing wrong with that. But if the Supreme Court says no, that's going to have an impact on the bond market, and it's going to be very confusing, and the market is not reacting to that right now. I'll be worried about it. But you know what? The way you make money in the stock market is not so much by looking for Nvidia. You make money in the stock market by hedging what I would call a fat tail. Right? You want to hedge what at the end of the day is called a fat tail, which means is that event that no one is expecting. Like, for example, right now, you could be buying options on the Standard & Poor's 500, which is a market. It would cost you like $700 to buy 100 options. And you would make money if the market would drop from, I think it's 630 to 500. Almost 20%. By next year, not tomorrow. Now, if you want to be positive, you want to make money in the stock market, and you want to, then it would cost you $134. So my point being is that it's very cheap right now to protect your portfolio against, I'm telling you, if this thing goes sideways with the tariffs and the discussions and the Epstein, and you could see that this thing is moving and is shaking. People within the Republican Party is saying no more, and Trump's style worked, I guess, at the beginning of the year when they were all surprised, right? And they said, "What's going on?" And his style worked very well. That's how he got elected the first time around. They didn't see him coming. They didn't see him coming the first time around when he got elected. And they said, who's this guy? He's never going to win. It's going to be a Bush. It's going to be a Rubio, whatever. This guy is saying horrible things, stupid things, or whatever. And he got elected. And that's what happened again with the beginning of the year when he's talking about the tariffs. And I said, what do you mean tariffs? It's not going to work. Or inflation, blah, blah, blah. And he said, look, the market is up. Stock market is up. There's no inflation, right? Nobody... And frankly, you should think about the fact that when we talk about inflation, be careful because the tariffs is really impacting 20% of the industrial base. Now, of course, if they go after what I just told you before, if they go after those taxes, if they go after Google and Amazon and things like that, that's going to be a problem. Right? But right now they're not doing it, so. The tariffs are really, and the inflation is stuck with the tariff, which is 20%. And but this is why gold is going up in value. Gold is going up in value right now, above $3,000, and it's not just gold itself. Cryptocurrencies are going up. Bitcoin. Why? Well, because we need a stable source of currency. What do we have? We have the dollar. Well, let's be careful here because with $37 trillion of debt, yeah, you could print more money, but eventually that's going to be a problem because you're not going to be able to control the currency that much longer. I mean, the U.S. is a reserve currency, so they could print dollars but then that's what they want to do. But the market acts differently. And the way you see how gold is going up, and Bitcoin as well, right, and up 100,000 plus, they need a source, and people need a currency to trade. And in fact, gold now is becoming part more and more of the money supply. So. The reason why these are very important is because they are finite amount of it. I think there's only 16 million bitcoins to be had, and that's it. They created it, and that's it. There's so much gold that can be had as well, and that's it. But the problem with the dollar, you could be printing all day long. Now, of course, you're supposed to be reasonable, and as we've seen. With the Supreme Court, it is not that reasonable. And there is a possibility on top of everything else that, they've done it in China, the digital currency, yes, because basically what you're saying is you could back up that currency with gold, the same way the dollar was backed by gold at one point in the 70s. Then they took it off, and the thing is, you take it off, and you could manage more if you're more nimble, right? You could be more nimble with the power supply and the money, and to make the economy better. The only thing is, if you don't know what you're doing and you become too reckless, that's not good either. And the Fed has been very reckless. Do not think for 1 second. Milton Friedman, a great economist, says that the only job of the Federal Reserve should be to just monitor the money supply. You need money, you give more money. There's too much money, you pull back. You should not be involved in rate setting and employment and directing the economy. You don't know anything about it. You've been wrong in the past. I hate to tell you, and this is something the administration has brought up against the Fed chair. The only thing is sometimes you don't hear all the news because it's so biased. But in 2021, when there was a huge amount of inflation, remember the inflation that we had after COVID, right? The Fed just sat there and looked at it. They said, how come you're not raising rates? There's inflation going on. I happen to be a Democratic. In fact, Pulte, the guy that's going after that lady for her mortgage, he said himself, you know what's going on here, right? He just does not like Trump, right? And at that time, the Fed chair basically said, no, we're gonna wait because it's a transitory inflation. And he was wrong. It was not transitory. Then he raised the rates. Now, if you see the administration said, well, you're making mistakes. 2008. Forget what's happening here now. In 2008, remember the big one, right? The Fed chair at that time did not do anything. He let it happen. He let the whole country, the whole financial system, just implode because he thought, and they brought him to Congress, in 2008, and they asked the Fed chair, "What the heck were you thinking?" You say, "Well, did you make a mistake?" It's on YouTube. Check it out, Congressional. And he said, "Well, yeah, the mistake that I made is that I trusted them too much. I trusted the bank would know what they were going to do." Okay, so they make a mistake. Meanwhile, everybody's buying for it. So you got to be very careful with everything having to do with the Federal Reserve. So obviously now they're going to lower the rate. So, but still, we have lots of issues. You got the tariff situation right now, right? You've got the tariff situation, and then you also have what's happening with the federal the Fed is a big topic as well. And then of course you have the Epstein things happening. You got all these things tagging on top of each other. There is no way that this whole thing is gonna come out just fine. Okay, don't forget to join the channel, because this channel is about one thing and one thing only. We are looking for black swan. We're looking to figure out what is going on and how bad things could get. And my friends, I will tell you, join the channel, become a member as well. Don't forget to become a member, because I give you recommendation every day as to what's going on in the stock market and how to take advantage of it. Right now, you can make money. Right now you can make money in the stock market, because the other thing that we said is, well, what about the AI bubble? Well, hold on. Okay, you cannot. The AI bubble is one thing. It's not a dot-com bubble. First of all, I don't believe there's an AI bubble in a sense that, yes, it's overpriced, but it's not the same thing as a dot-com era. Right? Number one, you have a lot of good, strong company. The dot-com era, they had pet.com, a really ridiculous kind of company with no backbone, with nothing, making no money, no infrastructure. Just people were selling and people were buying because it was a dot-com. You got NVIDIA. Yeah, I know NVIDIA is worth a lot of money, but they're making something. They're making money, right? You got Amazon. You've got Meta. You got a lot of strong company. And the thing is that we're not talking 50, 2,000 companies. We're talking maybe 7 companies really that are very strong, very rich, and very overpriced. I know, but that's not the market. The last time when the market collapsed and had a problem last week, when Altman said, I think we may have a problem with the AI, what happened really? It didn't go down that much. It kind of withered a little bit, and then it recovered. And the Dow didn't go anywhere. Okay. Now, is the American money going to fall? It is. The dollar is weakening, yes. But you have to understand that do not, and I want my subscribers and my members to understand that you should not make it personal about a person. Oh, it's his fault. He's doing it, and this is what happened. This is not. Yeah, you may not agree with the way it's being done, but these things need to get done, right? These things need to get done. The U.S. needs to be able to reduce its trade deficit. Hey, it's not just the U.S. saying it. India says it as well when they're looking at China. They say, I like you a lot, but I have a huge trade deficit against China as well. And I want to protect my farmers. India says that. So it's not just a U.S. thing that want to protect your own country and want to reduce your trade deficit. There's a bunch of other countries. The thing is, can you agree with them and how you go about doing it? That is the question I would agree. Is that the best way of doing it? Well, we shall see, but obviously things are going south a little bit now. But then again, if you don't do anything, that is not good either. You have to do something. Maybe you should be doing differently. Well, maybe it will going to take longer, right? Look at this USMCA with Canada and Mexico and the US. Well, we can't talk about it until June of next year. So we're going to talk because that's when it gets reviewed. So these things take a long time to review. Is the U.S. has that much time? They have 5 to 6 years regarding the ability to maintain its competitiveness with U.S. semiconductors. Maybe a little bit longer in terms of pharmaceutical. You got your vaccine, right? You got your vaccine recently in the U.S. It's not made here. You got antibiotics. It's not made here. Nothing is made here. And no country wants to be in that situation where they're dependent on other countries. Remember, the U.S. was not invited in that trip when you had China, Russia, and India, right? There was just the three of them. There weren't four. It wasn't like a big happy family. Right? So these are real issues. These are real problems. These are real situations that you need to understand. Because if you don't understand it, you're going to find yourself very surprised when, for example, the Supreme Court is going to say, no, these tariffs are not legal. Then the bond market is going to fall. And as the bond market falls, the cost of the debt is going to go up. So then you're not going to have any liquidity. And then jobs are going to be scarce, right? Or you get a rate decrease in September, and then inflation starts creeping up because the Supreme Court say, you know what, it is okay to continue. Great, let's do more tariffs, and then eventually the tariffs permeates, and then they start competing with the U.S. in terms of a trade review, right, where they could actually start taxing the U.S. companies. I'm talking about the service companies, right? They're going to target the service companies because you're going after security. So then they target the service companies, and then you have inflation across the board now. Okay. The idea is, yes, Trump was talking about backing treasuries with gold, and that's important to do because at least but the fact that even talking about that is a problem because it means that the treasury are weakening. The treasury are under attack. China doesn't want any. And when the Supreme Court says no, that's going to be a lot of damage because that's going to impact the treasury even more. And that's right. And because they want to back up the treasury with gold, that's the reason why the gold is going up and up and up. You need to reinforce your currency. They're all doing quite fine. I mean, when I say they're all doing quite, China is not doing fantastic. I mean, they have ability to produce and ability to finance their needs, and because there's only 1 or 2% decided, right? But still, you rely on China for lots of things, and that's going to be a situation that you need to worry about. Well, what America can do to save itself, it needs to first it needs to reduce the debt. The $37 trillion of debt is manageable, but is not sustainable. In 10 years, there's not going to be enough money, right, to pay for Social Security. Remember, Social Security is paid for by the people working, and there's less and less and less people working. And by the way, because of the immigration policy, there's less and less and less people working as well. So that doesn't help, right? So you need to manage the debt. That is too high. And you have to stop borrowing. You have to start cutting costs. That's what's happening in Europe right now. France's government is probably going to fall next week because of the fact that they have too much debt. That's one thing. Second, what the U.S. needs to do, they needs to start, protecting its supply chain more, that's what's happening now. But the way it's being done, you went a little too fast on the tariffs here, right? A little bit too fast. I mean, I know you're collecting lots of money, but it's a tax on the companies, but you went a bit too fast, and now you have to track back. It's creating chaos, uncertainty, huge amount of uncertainty, and it's going to be a challenge. The U.S. has a thing going for it. It's obviously a superpower, but also has a very strong system of laws compared to other countries, so that makes it more stable. People are more willing to invest, and money has been coming to the U.S., quite frankly, quite a bit. So that's not too much of a concern. The thing is how much the debt is the one. Don't forget, when the stock market was going down and the U.S. administration was saying, you know what, we are here for Main Street, not for Wall Street. So the stock market was cratering, and they said, I'm not worried about that. I mean, that's okay. I mean, you don't like the idea of the tariffs, you don't know, fine. But then what made them change their mind was when the bond market started going down. Remember, look at it. The U.S. Treasury yield went up a lot to levels that was starting to be more like a credit events. Listen, they think that they don't think we could pay our debt back, so the cost of the Treasury is going up, and that's not good. That's the only thing that stopped the administration with the tariffs and gave a 90-day reprieve because it was out of control. He wanted to do even faster. So he waited 90 days. They said, you got to stop. You got to stop. Otherwise, we're going to lose the bond market. And that's what happened in 2008. We lost the liquidity in the market. Don't forget, you don't have a recession or a depression because the stock market drops. No. You have one when you have no liquidity. People don't want to invest their money. That is what you have to worry about, my friend. Always worry about that. Because if you don't have any liquidity, then you have a problem. And that's always a situation that you may potentially have going forward, and then you need to worry about. So I don't think that's going to be the case this time around. I think we should be fine, but that could be a problem. And now, of course, we need to watch what's going on with the Epstein story. We need to watch what's going to happen with the, obviously the Supreme Court. We should see a rate decrease pretty soon, and let's see what happens after that.